Meeting to order. Ask the clerk to call a roll, please.
Ron Kinsley,
Here.
John Righeimer,
Here.
Stacy Hessel, Tom Duffy, Dale Schleter. You have a quorum.
Thank you. Next item is pledge allegiance. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Number 4, certification compliance open meeting law.
This meeting has been noticed to the public and news media as required by section 19.84 of the Wisconsin statutes.
Thank you. The agenda is next. It is set. 6 is public comments. Anybody have anything for public comment? Lynn, is there anybody virtual?
No.
Number 7, approve the minutes of the previous meeting of November 9th. Has everybody had a chance to look at them, review them?
I said, second.
Motion by Mr. Duffy, second by Mr. Righeimer to approve as presented. Any discussion? Hearing none, all in favor of the motion?
Aye.
Opposed? Motion carries. Number 8, we have the audit presentation from Clifton Larson. Welcome.
I'm April Anderson from CLA, and my colleague Melissa is here with us. She leads the team for your audit, and we are here to present the 2022 audit reports and financial statements. So there should be an executive audit summary. So you have the big, thick booklet, which has lots of useful information, but a little overwhelming. So we focus on the executive audit summary, the smaller booklet. And so that's what we'll be looking at mainly today, and is similar to what we've kind of gone through in the past. So on page 1 of that is the audit findings and results, just the overall findings and results. And in the second part there, the audit opinion, you'll see that we issued an unmodified audit opinion on your financial statements. And so that is a clean opinion, or the highest opinion that you can receive. So that means your financial statements are in accordance with generally accepted accounting principles and the governmental accounting standards that you have to follow. So obviously what you're striving to follow and get there. The third section there, internal controls, what we're reporting there is, as we do go through the audit, we are required to communicate to you any instances that we find in internal controls of weaknesses or significant deficiencies. And so there you'll see that we did report 3 material weaknesses, they're called, and these are 3 that you've had in the past. There's no new items, and they're very common. So we work with over 150 governmental entities in just Northwest Wisconsin, and because of the limited number of staff usually working within the financial realm and things like that, we usually issue these findings for them due to that. So you are to be aware and cognizant of them, but they are nothing new, and they're very common. So the first one is limited segregation of duties. And what that means is that in the different processes, the financial processes, receipting, disbursements, making journal entries, and that sort of thing, one person shouldn't have access to the different parts of that process. They shouldn't be initiating the transaction. They shouldn't be the one reconciling it or reporting on it. And so again, due to the limited number of people that you have within the financial processes, we do report that as a weakness. The key there is to look at mitigating controls that you can have in place, reviews and approvals by other individuals and that sort of thing that can mitigate the risk of error or fraud occurring. So the second item is material audit adjustments. And so as I said, and really the next one kind of goes with that, the financial reporting. And that I said that your financials are in accordance with all the accounting principles that you need to follow. However, we do propose certain journal entries and adjustments to get them to that place. And so that's what those next 2 kind of relate to, is that assistance that we provide in proposing some journal entries to get your financial statements in accordance with all those rules and regulations. The very final item there is compliance. So due to the amount of federal and state funding that you receive, we also do a compliance audit as part of the financial audit. And so there we're testing certain requirements of some of the funding that you receive to make sure that you are following those rules and regulations related to that specific funding. And so with the specific grants and funding that we tested, we didn't note any compliance issues with those. So those are the high-level results. And then we can jump into some of the actual numbers and financial results, starting on page 6, it should be. So here we'll start with the general fund, and that's where most of your activity occurs for the county, your main operating fund. And we show a few years of information so you can see how things have trended and changed over the last couple of years. I won't get into every line item there, but just hit on maybe some that have changed a little bit more than others, or where we kind of focus to think about financial stability and the results and how things ended for the year. So we start with the general fund balance sheet there, and you have your assets, then your liabilities, and the net of those is your fund balance. And so in the assets section, just wanted to point out a couple things. Towards the bottom of that first section, there's a due from other funds. So you'll see last year that was a little bit higher. And what this is, a couple of your other funds have kind of cash deficits. And so the general fund is somewhat loaning some of that cash to them to continue and not have to go out and like get a bank loan and that sort of thing. So you'll see that was at $1 million last year because the highway has a cash deficit or had a cash deficit, and your capital projects fund had a cash deficit. This year it's at $862,000, and most of that does relate to a highway cash deficit still of about $764,000. And that's pretty common just due to the amount of activity that goes through highway, and sometimes the waiting for your financial assistance and state aid and that sort of thing, and the cash flow there until after year end. The next one I just wanted to point out, inventories prepaid. So that deals with insurance software type things that are paid ahead of time but are to be used for future fiscal years. And so that's where the prepayments come in. And I'll mention those a little bit later when we get into fund balance. We'll circle back to those. So then, as I said, the key, where we kind of land and focus our attention to is that fund balance, the net of your assets less your liabilities. And so you'll see the very bottom line on this page shows that your fund balance decreased by $348,000 in 2022. And so you'll see in the last couple of years, you actually had pretty big increases. And so the decrease was last year you had identified and approved to move $1.3 million over to HHS to help with providing those services, and then $300,000 to the resource development. So it was kind of a planned change in bring down of your fund balance. And so that was what made up a lot of that decrease. However, that was offset by some positive sales tax came in. Revenues came in over budget about $660,000 and was up $200,000 from last year. And so, of course, that movement that you had to HHS and the resource development was offset by, some positives as far as revenues coming in over budget and some expenditures coming in under budget. So we'll go back up now a couple lines to your fund balance decreased by the $348,000. But the total fund balance that you do have is $10,601,000 at the end of 2022. And we look at, it's broken down into different categories, and we look at some of those categories separately. And so in that fund balance section, you'll see that there's a non-spendable portion of $1.395 million. And so that is, it's sitting up in your assets on your balance sheet, but it's not really available for spending. So there was prepaids that I said. That cash is gone. It'll be applied to those expenditures in the future years. So that's not really available. Then you also have committed fund balance of about $1.7 million. And so that's set asides that you have approved, or it's actually your fund balance applied of 1.7 million for your budget in the next year. So again, you've identified what that funding is to be used for. And then there's assigned fund balance of 678,000. And that is more of those set aside type items that you've identified that funding to be used for, which a lot of that, about $630,000, is for leave accrual that your employees have earned, but will be paid out into the future. So you've set some funding aside so that you're available to pay for those items when that time comes and they take, they take those leave absences. So ultimately yep.
Can I add one thing on that?
Mhm.
That assigned, the reason it spiked for
Last
21
year.
was that 1.6 million, the 1.3 plus the 300,000 that was set aside from 21 surplus for the HHS transfer and the, was it?
Resource development. Yep. Yes. Thank you I had that noted too. So it was 2.3 million last year. And that now it's down to the 678,000. So it is exactly those transfers that I talked about. And then that actually occurred in 2022. So that went out of that balance. Yes. So ultimately then what that leaves you with is that unassigned fund balance. And so that's what we consider as really being available. And that's not equivalent to cash because you have that in other forms, receivables and that sort of thing. However, that, as I said, is kind of what is considered available technically. And so you will see that that went up quite a bit, again, because of some of that movement and the assigned going down. Your unassigned is at 6.8 million at the end of 2022. And so a benchmark that we look at there is taking that unassigned compared to your annual expenditures. And you'll see that that percentage is at 46% at the end of 2022, and it was at about 40% last year. And the county's policy is to have that between 20 to 30%. The general recommendation that we have and the GFOA has is about 25 to 33%. And what that means is that you have available funds set aside for those unknowns that occur. And so technically, if all else failed, you would have some available funds to support, operations for a little while, for, 3 to 4 months, if all else stood still. And the average of the counties that we work with in Northwest Wisconsin is actually usually a little higher than those, the policy and the recommendations. So that's about 35 to 40% that we usually see. So you're a little bit above what you have been in the past, but again, that's then you have some available funds to help support the programs and things that you want to provide for your citizens. So that's positive. So even though your fund balance went down overall, you actually were able to increase that unassigned a little bit. So is there anything else you want to add there, Mike, or are there any questions?
I guess
before
the
we
final
move on?
thing I would say is if those transfers had been made in 21 in the year that the money was from, this would look a lot smoother and we wouldn't have had a negative fund balance for 22.
Correct. It was just a timing with those transfers. So last year you had a 3 million add to your fund balance. It would have been less by the 1.6 million. This year, your add would have been about 1.2 million to fund balance had those transfers been done earlier. So.
Question,
Yep.
in the past, you can see in 19, we had 21%. And we were always told around 25 to 35, I believe.
Yeah.
So now if we're up to 46, is there something else we should be doing that, it gives us more access to cash, obviously, but.
Yeah, it gives you availability. So, if, which sometimes you have to think about the debt piece of it too, but if you usually take debt out for capital purchases, I'm not talking about like the big capital project, but capital equipment and things like that, there's potential like maybe you won't have to do that. You have some available funds. However, you want to also with your levy limit and things like that, sometimes you need to keep your debt at a certain level as well. So you have to look at those pieces too, but that's one potential thing. I'll get into the highway fund a little bit later. And so there, sometimes you maybe have to do some transfers, and we see this a lot at the counties where they have to do some transfers in to help with those operations, because the charges for services and things coming in don't necessarily cover all of that all the time. And so you do, and I know human services will look good too, because you were able to move some of that money there. But depending, year to year, those expenditures and revenues can really fluctuate too, depending on the needs of the constituents that you're helping. So yeah, I mean, kind of depending on each year how things go, you might have to move some funding to that type of program or the highway and that sort of thing. So yeah, those are a couple different avenues or options.
If I could just, and April, if she wants to comment on this, looking at other county financials and our financials, I think one thing the last few years that's come out is I would call the ARPA effect or the COVID effect,
Yeah.
where some of the operating dollars were replaced with COVID dollars that aren't going to be available anymore. So some fund balances in local governments went up because they didn't have to use levied dollars.
Yeah.
But that's why we wouldn't want to operationally on a year to year start spending more because we have the fund balance, because the cash flow is not going to be there.
Yeah. Yeah. So, I mean, generally with that ARPA funding, it was, you usually would try to look at one-time type things, because you can't maybe use that funding for new programs or new positions if you can't sustain it going forward. So yes, it might have supplemented a little bit of those costs that you would have had to pay for otherwise with levy. Okay, well then we will move on to the rest of your funds, which the county does report quite a few funds. So the next section, item number 2, is your special revenue funds. I won't go over every line item here, but just hit on maybe a couple that changed quite significantly or were new for the year. So there's those very top 2. We've already mentioned Health and Human Services and Resource Development, where those you'll see did increase because of those transfers from the general fund to these funds in the current year. So those are a couple of the bigger changes. Otherwise, I did want to, you mentioned the ARPA fund kind of in the middle of the pack. The ARPA fund there has zeros across. So this is the fund balance of that fund at the end of the year. In that ARPA funding, you receive that cash. It's not recognized until you apply it and spend it. And so that's why there's no fund balance. However, you did spend about $930,000 of that funding in 2022, and you have a little over $2 million in cash remaining there. It just hasn't been recognized as revenue yet. So it's you have about $2 million, and again, this is at the end of 2022 that you have that remaining in that fund. Then the other couple that I wanted to point out was 2 other new ones was the opioid settlement that you received. So that's a little bit further down towards the bottom. And you'll see that had a fund balance of $121,000 to be spent on those particular purposes laid out in that settlement agreement. And then that LATCF, so that was Local Assistance and Tribal Consistency funding that was received. And that is similar to the ARPA funding, that it's not recognized until you actually apply that against the expenditures in there incurred. So you have about $370,000 cash in that fund as well to be recognized when you apply it against expenditures. So so those were kind of the oddballs this year. Then the next fund or type of fund that the county has is the debt service fund. And so that's exactly for that purpose, is to levy or get transfers in to pay for your principal and interest annually on your debt service. And so here, usually then it's around about a 0 fund balance or very low fund balance. You'll see that it increased to about $155,000 this year. And that is due to you issued debt and there was a premium on the debt. And so that premium went into the fund balance to be able to help for your future principal and interest requirements on that debt. And so that's why that fund balance exists at the end of 2022. Out of this fund, you did levy for and pay for about 1.19 million in principal and interest requirements that you had for the year. The next section, item number 4, is your capital projects funds. And so here you'll see these are common to go up and down and fluctuate quite a bit because they're not annual recurring type activities. And so usually you'll see in the last couple lines there where you've issued debt over the last few years for certain capital purchases and projects. And then you have now spent it down. The courthouse edition obviously is the most recent one where 8 million was issued there, and you spent a lot of that in 2022, but there was some remaining for the final costs of that project. So item number 5 is your highway fund. And so I had mentioned this a little bit earlier with as far as the no cash balance there. And so you'll see that in the top line that there's minimal cash available for the last few years at year end. And that's pretty common, as I said, due to kind of the expenses that you have and some of that funding that coming in after year end. So the cash isn't available at the end of the year. So what you'll see, you have your assets. We show a little bit more detail here. You have your assets, your liabilities. So that third line down in the liabilities is that due to other funds. So that cash flow deficit that the general fund is covering at the end of the year for $764,000. So what we see here at the very bottom line in this section is that your net position, it's called to, it's equivalent to the fund balance in your other funds, decreased about $300,000. And so you'll see that it's in the last few years, there's been negative changes in the net position there, which, as I said, is very common that might occur at some counties for a few years, and then you might have to supplement that with a transfer to cover some of those costs eventually. However, you will see that your unrestricted net position is negative, the negative $713,000, because a lot of the funding that goes into this fund is for infrastructure and your investments in capital assets, your equipment and that sort of thing. And so your overall net position is positive, but it's just in those different categories of the net investment in capital assets. One benchmark or kind of financial health that we look at here is that current ratio. And what that is that your current assets, your available cash, your receivables that are to come in in the near future compared to your current liabilities that you have to pay out at year end. And so you want that to be at least a 1-to-1 ratio. And you'll see that even though you don't have cash available, you have a lot of due from other governments and receivables, that ratio is at 2.1. So you still have the available funding that's supposed to be coming in to pay for your current liabilities. Anything that you guys want to add on that, the highway part of it, or?
I would just say that is the one fund we might look at transferring some of that surplus general fund unrestricted balance to.
Or maybe put it on the roads.
Potentially.
Yeah, so that's very common that occurs. So now we're in the home stretch here with the final 2 items. You have the internal service fund, which is where your office supplies, where you're providing services really within the county to the departments. And so usually there's minimal kind of net position available there. You will see that this year the unrestricted net position did change to a negative $3,000. And that was actually due to a new standard, a new government audit or accounting standard that you had to follow related to leases and the equipment that you're using, copiers and printers that you're using out of that fund that are long-term agreements. And so that's why that changed a little bit, but minimal activity there. So the last item we like to look at is the long-term debt. And there you'll see, and just what your future obligations are of the county. And there you'll see your long-term obligations. You have your general obligation bonds and notes. And so obviously you issued 8 million in the bonds this year. And so that balance went up a lot. And so your overall general obligation debt is a little over 10 million at the end of the year. And every county, municipality, school district in the state has a debt limit. And for counties, it's 5% of the equalized value of the property within the county. And so there you'll see that even though your outstanding debt went up to that 10 million, you're only at about 4.4% of what your overall debt limit is. And so that's really a minimal amount. I mean, counties are usually lower. They usually range between 0 to 20%. So you're well within that range at the lower end of that range. So even though you have that higher debt balance, it's no concern there. And you're just utilizing what's available to you. And then the other long-term obligation that we show here is the vested sick leave and vacation leave that your employees have earned, but won't be paid out until they take that in the future. And so that's estimated at about 1,150,000 overall. And as I mentioned earlier, though, you do have some funding set aside in the general fund. So when that does occur, you are able to, make those commitments to your employees. And it won't affect your unassigned fund balance then at that point in time. So these are the key highlights that we like to go over based on the information of your overall audit and the full report. But these are the key pieces that we feel are necessary for you to know as the governing board. So are there any other adds or questions anybody has?
How do we compare to other counties?
And I mean, the key things that I mentioned and we look at is that unassigned fund balance in the general fund. And so, as I said, the average with the ones that we work with in Northwest Wisconsin is about 35 to 40%. So you see yourself, at that 46%, I think it was. So a little bit higher, but and then as far as I've mentioned throughout too, as far as the highway operations and the HHS operations, some counties do actually close HHS out every year. So whether they have a deficit or a positive balance, that's just closed out through the general fund. So a couple counties do it that way. Others, might carry a fund balance or do it as you kind of did. You saw that, maybe you needed to help supplement some of that funding for those operations. And so you did that. So yeah, that does go both ways, but very comparable as far as in the operations that we see in the outcomes and results.
Thank you. Any other questions? Well presented.
Well, thank you for your time.
Mike, anything else you want to add?
No, she went through it very well. Thank you, April.
Move on to number 9, Finance Department report, sales tax distribution.
November was a very strong month. About 33,000 over the next highest November. So that was really good. Put us back on pace to be very close to 3 million for the year. See how December comes in, but so far we're looking very strong. Any questions on sales tax? So then moving on to budget performance through November 30th. We are now through 92% of the year. Let me make that a little bigger. Revenues are looking really good. I did have one error on here. If you want to go down just one more page, I think, Lynn. One more after that. So I always do that net of transfer that we haven't had to do and hopefully won't have to do. I've got on here that we are at 92%, I think, of revenues. And actually, if I net that out, we are at 100% of revenues for the year. So we have done very well on the revenue side. That transfer from fund balance was about 1.8 million, I think. And again, the hope is we don't have to do that. We haven't in the past. Even though last year, when you look at the audit, it looks like we did. That was that transfer that was set aside from surplus from 21. So it's a separate transfer. On the expense side, we're doing very well too. We're at about 74% of expenses or 80% when I net out that transfer to HHS. Last year, I think we were at about 85%, so we're down a little bit, so doing well on the expense side as well. HHS itself, we are below on both revenue and expense. We actually are showing a little deficit right now of $225,000. Last year at this time, we had a surplus and the revenues were pretty close, but our expenses were less. And I think we've had a little bit more money in placements than last year. Last year, we did end up very good in placements. They're costly. And we have had a few more this year. And then on the highway, the revenue's down a little bit from a year ago and the expenses are a little bit up too. So last year we were closer to a net zero. This year we've got a little bit more of a deficit showing. And this is one that we've talked about potentially wanting to move a little of our fund balance from the general fund to highway. Not that they have a deficit in fund balance overall, but as April mentioned, just the cash flow. I'd like to see it a little closer to positive than negative. So that might be something we consider in the future.
Winter maintenance got a lot to do with that also.
What's that?
The winter maintenance will have a lot to do with that also.
We're over for winter maintenance this year. Not drastically over, because luckily we haven't had much to do this year, this part of this year's winter. The 23 November and December have been good. But we're probably $60,000 over budget on winter maintenance. But we came into November already over a little bit. So knock on wood, it's not as bad as we were thinking it might be last April. Any questions on the budget performance? CIP, we had a little bit of activity in November, just some small purchases, although one of them was a forestry pickup truck. And then also we did a down payment on materials for the maintenance garage roof. So that's actually a 24 CIP, but we did the borrowing already. So the money is actually already there. And that will be happening as soon as they can get to it, I think. We had one small part they had to redo already where I think it's the entrance awning, isn't it, Andy? That pulled off. So that's already been worked on. And then this is to do the rest of it. And then we actually had a reimbursement on the Brunette Dam project of almost $300,000. So I did put that in here because it does run through CIP. So
Is that going to cover the whole project?
I believe dams are 50-50, aren't they? Yeah.
That was the dam reimbursement.
Yeah. Any questions on CIP? And then moving to the investments, another strong month, almost $100,000 in interest earned for the month again between all of the funds. Most of it is general fund operating. Yes.
Number 11B. The court bond.
Oh, I forgot that was there. No, we need to do that. So last month we talked about how the clerk of court carries a bank balance that's outside of the county, but it's for the bonds that are paid by people who are awaiting trial. And there's quite a bit of money in there. It's between 550 to 700,000 depending on the month. And right now, or not right now, but previously that was getting nothing on earnings. So I talked to Franzen, who holds the account, and even though it's not part of the county depository, they agreed to give us interest on that. So we're getting 4.25% on it. But if we bought some CDs, we could up that to about 5.25% to 5.5. So what we talked about is bringing this under the finance committee's investment policy and having us kind of oversee it.
How much money are we talking about?
It's between 550 and 700,000 a month generally.
Is that, that was built up over just this year? Or
Some of it is, I'm sure, forfeited bonds that are still there. Otherwise, it is an in and out, but the typical balance is in that, it's over $500,000. And we would not want to do CDs for all of it because, at any time, we could have to pay a lot of that back. So what I did is I analyzed what we have in there typically, what typically could be drawn per month, and then came up with a little scenario of what we could do. And
that is?
I was gonna say, I think I presented that last month briefly. I think where I stuck that. So what I figured is I averaged it out for the year, and then I took the high and the low, and then the typical payables at the end of a month. So the strategy that I would recommend is that we do liquid of about 200,000, and actually it's 3%. They're not giving us as good as we're getting at the regular deposit. And then about 250 in a long-term CD, and that would be about 4.3%. And then a short-term CD of about 50,000 at 4.2%. And that would give us about $1,600 a month in interest income. If we just kept it at the 3%, we'd get about 1,400, 1,400 to 1,500. So it's not a huge difference, but we have some.
200 stays in the savings.
Yes.
Okay.
200 would stay liquid, so that if we had a
Alright.
demand for issuing a check to individuals, that would be there.
Right.
And then the CDs would be some long-term, some short-term that we could keep reinvesting. Yes, Stacy.
Well, I didn't want to disrespect. What is the use of those funds then? What can we use those funds for? Can you remind us? I know you touched on it last.
We can't use anything do anything with the principal. That has to stay in a separate account.
Mhm.
What we can pull into the general fund, which I'd recommend is going to the clerk of courts fund, is the interest. So we could draw that monthly, help supplement the expenses of the clerk of courts,
Okay.
the general fund, clerk of court expenses. So if it was $1,600 a month, that would be $2,000 or $20,000 a year
Mhm.
to supplement clerk of courts, which is good. It's about half a position without benefits. So
Do we need to make a motion to bring it to the full board or just approve it in this?
I'm looking at the agenda and see if we have a line item for that.
Possible action.
It says discussion and possible action. If so, I'll
I'll
make a
make-
motion.
Go ahead. Go ahead.
I'll make a motion to approve that transaction.
I'll second.
So we have a motion by Ms. Hassel, second by Mr. Rockheimer. Any further discussion? I'm thinking about this. I guess it's. Well, I'm wondering how and if and is there, or all the above, is this tied into the treasurer's office? And I don't think it is.
it's not a county account. Technically, it's held by the clerk of courts in their own checkbook balance.
Anyway,
And it technically can't be a county account. It has to be separate, other than the interest that we can pull in.
we have a motion and a second. Is there any discussion? Hearing none, all in favor of the motion?
Aye.
Aye.
Opposed? Motion carries. Thank you.
Thanks, Lon. Sorry about that. All right, moving on to our own investments then. Again, it was another good month of almost $100,000 in overall interest for the year at 908,000. Really should hit $1 million, which was my unofficial goal for the year. So that's always nice. Again, this is always a month behind, so we have spent down a little more ARPA. I believe I know we paid the $40,000 payment to the Draper helicopter pad. So we're at about 246 now.
Is that completed?
Yeah, I was just gonna jump in on that. So it is completed. They did provide us with the bid notices, the bids, the contractors, the receipts, and documentation of completion.
Okay.
So I know that was one of the contingencies when that was approved we asked for them to supply all that, so we did reimburse the 40,000 of their expenses. I mean, their costs were more, but if anybody wanted to see those, we do have those.
Thank you.
Opioid money, there's been a small amount of activity both in and out. We are starting to run the program now, spending a little bit of money, and I believe we got another about $4,500 in a second settlement or third, whatever it is, on is it pharmaceutical side, Andy, that one was?
Yeah, it's one of the pharmacy settlements.
Yeah. Would you like to see the receipts and disbursements on the report for that, or? It's minimal. And then LATCF, we still have not designated any spending for that to this point. Any questions on investments? Moving into the ambulance billing analysis and other reporting. I'm looking at you can go right to the first report. So the aging report, we have a little bit less overall than last month, which is good because last month had been a little bit of a spike from what we had previously seen as a downward trend in the overall. Out of that, the current is up, so that's always good. We want more current than anything else. And after 2 months of a downward trend, that did bounce back a little bit. The balance of greater than 120 days went up another %, but the overall balances did not go up between the two, so that's good. We just had less overall outstanding, so keeping that level, the percentage went up. But it's good that we didn't have an increase in those more delinquent billings. Any questions on that? Then moving into some of these charts we've looked at quite a bit here. The average calls per month again is up from last year, the last 12-month rolling period. It is up even from the current 12 months a year ago. That was about 159. So we are seeing movement there. The next slide is the billings. And again, we're above the last 12 months, previous 12 months, but still not where we were a couple years ago. And still having discussions with John here and there on why that might be. And I know he's looking into a couple things maybe on how they're billing out some things. So hopefully we see a little increase there. On the collections, again, good movement over the previous 12-month period, but actually down a little bit from a year ago, the last 12 months. So we need to, again, keep looking at how we're billing and how we're coding things and make sure we're maximizing everything that we can be. Percent, next slide. It's still strong. We were, a lot of the year we've been around 40%, so it is down a little bit. I don't really have an explanation for that. It's still quite a bit over the previous 12-month period, down from our peak of a couple years ago, but something we're going to keep looking at to make sure we're doing all we can to keep that percentage high. The dollars billed and collected per call. And again, I think this is reflective of maybe we need to look at our billing practices, make sure we're maximizing all the line items that we could be. And it also could be just a pure factor of where the calls are coming from, because mileage is also a big factor on how much we bill. So it could be that as well, but like I said, John and I have been in some discussions here and there on how we're doing with billing and what we could be doing better, so we'll keep looking at it. How much do we take in?
Right off.
Oh, right off? You know, I don't know that answer. I don't know that we don't do the write-offs. Correct me if I'm wrong, Andy, but doesn't the billing company, and we basically just book revenues. So I would have to get that from the billing company. And I think that had been, well, actually, we used to do it ourselves, didn't we? Because isn't that the ones we're cleaning up? Or is that just was left over when we transitioned companies?
Yeah, when we transitioned, we had to take
Yeah,
the billing.
so I think we've always done it that way, where we only book the revenues, not book the gross and then write off bad debt.
We can get a number on how much is uncollected. I don't know that we've been writing it off, but they bill, they get the payments in, if they don't get the payment, it goes to collections. They eventually, after a certain period, get judgments, but it's uncollected. So we haven't been doing write-offs, but like you're seeing here, we're collecting 40%, 39% of expenses. So we're not taking action to write it off, but you're subsidizing the ambulance service by the amount of levy we put in. So the levy is cost over what we collected. Is that?
I'll see what I can get on that for next meeting, though. I made a note of it. Here are where the ambulance calls are going. And you can see there's concentric circles, and most of the activity is pretty close to the city of Hayward. City of Hayward is the #1, town #2, and Bass Lake. So it's all very close to our main headquarters here of where the calls are going. It's a little interesting that Winter is 4th, but that is a very large landmass township, I guess, too. And then here is the income statement for the ambulance service through October 31st. And you can see we're running very well there. I know expenses are running stronger than last year, and John has worked really hard trimming stuff that we didn't need. He's looked at some of the software they're using. He's actually looking at how we're staffing, a lot of different things. He's done a very good job.
Are we fully staffed?
Not quite,
No, we're still down 2 paramedics.
but a year ago at this time, we were down in all 3 positions, and now we're just down in paramedics, so we've made
So
good
we're
movement
saving
there.
money on not having a chase car up there.
So that's what Mike's talking about, what John's looking at. We don't have a chase, but can we get in the Ojibwa garage is there for geographic purposes, but has low call volume. So can we shift some staff to try to get another ambulance up and running in Hayward? So then we could do more
Transfer.
transfers.
So when you go back to this of where the runs are. Under 61 runs. We still get a lot of runs to the LCO. Well.
It's in the township.
It's split
It's
up
by
100 and
township.
80.
And John, that those are still going to be the Hayward ambulance that does those. So rough numbers on a given day, Hayward ambulance might have 6 runs and Ojibwa might have 1 or 2. Seasonally that changes, but that's rough numbers.
Thank you.
Right, you can probably go down one more then, please. And this is just a call summary from the aging report. And you can see the vast majority of the aging report is private pay, next being Medicare. So private pay, it makes sense. They would be more on the aging report. Probably a little harder to get some of the money. And Medicare can be slower, and that obviously has a higher write-off percentage too. But I think the write-offs aren't reflected on here though. This is just what we're carrying for what we're gonna receive.
Do we have a way that we're tracking? We used to call through LCO that there was no insurance, then LCO was paying X amount of dollars. You know anything about that?
I think when I look at which I can't post up here, but all the individual ones would reflect ones that might be that, but I guess I don't know the arrangement of, I know the billing, I don't know what arrangement there would be for the paying of it, I guess.
Does anybody else remember some of that? It was if the person was a LCO, I don't know if it was lived on there or not. And if they didn't have any money to pay the bill, we looked into LCO was going to pay X amount of dollars. And I don't know how far that went. Do you recall, Dale? Turn your light on, buddy.
Sorry. Pardon? Yeah. Well, they started getting involved and this paperwork had to be done before that paperwork, and this one had to be done before that one worked, and that one was supposed to be done before this one was done. They gave up.
What happened?
They gave up on trying to collect.
Who gave up?
Are you talking about the BIA gave up on trying to collect?
Oh, they made it so complicated and it's very difficult.
Oh,
We'll follow up, like I said, hadn't heard that.
Yeah, it's been a few years already. I wonder if Tweed knows because he was involved in it. Well, something we should look at it, yeah. What else you got, Mike?
The next slide is just another way of looking at the aging summary. Breaks it down by what time frame they're in, each of the different categories. So then next we have elected officials wage review. And I did pass out copies of that. That might be a little easier to read than up on the screen there. So this first chart we're looking at, I broke it down. I've got the Sawyer County salary by position that the study looked at. And this was a study done, I'm assuming, by Wisconsin Counties Association. Not every county responded to it. So it's not going to be all 72, but the vast majority did respond. So this first page is a summary, and I've got in yellow Sawyer County. Then I've got the next one, which is kind of a peachy color, are all responding counties. And what I added to the information that they gave is I added county type, and there are 3: rural, metropolitan, and micropolitan. So a metropolitan close to us would be Eau Claire County. A micropolitan is one that's close to a metropolitan, but not a metropolitan. That would be one like Dunn. So it's right next to Eau Claire, but not large enough to be considered metropolitan. And rural obviously is rural, like we are, smaller and There's not a major city hub within it. So there's all counties, there's rural. I looked at population size plus or minus 30 of Sawyer County. I looked at our region. And then I did one which is best comps, and what I made that up out of are ones that are first of all within plus or minus 30% of our population, and then rural, and then I did look more towards our region. I expanded it from the regional a little bit, but there's still there's a couple rural ones down by Madison, Milwaukee, but that's not a very good comp for us because they are influenced by the major areas. So those are the 5 different categories we're going to look at. And just in this brief summary, and we'll go into the detail in a minute, but the farther you distill down, the better we look. We are not great, obviously, as far as our pay compared to other counties. And against all counties as a whole, we're in the low 80s, even under 80 for the sheriff. You get to the all rural and we're in the high 80s. You get to our population group and we're high 80s to low 90s. Look at our region, we're basically low 90s. And then if you distill it down to those best comps, we're low 90s to mid 90s. So each one gets a little better, but we still are behind and probably do need to make a correction on that for our next round when the elections come up. So then moving on to the next one, this is all of the counties, and this is actually 2 pages. But the one thing I want to point out is if you look at, it's fairly typical for the clerk, the register of deeds, and treasurer to be paid the same or very similar. Looking at those 3 categories, we are one of, I think, 3 counties that are under 60,000 for those. So we are definitely on the low end.
How many hours are the other counties working? I think ours is set at 35. Are they all at 35?
Most, well, I haven't done that in most. Certain counties are down to 35.
That accounts for some of the pay differential. Or
Well, I don't know
ratio.
the history here as to why the county 35. I think, I'm assuming that the county set the wage based on the 35 hours. So if you extrapolate up to a full-time, it would be harder.
Right.
And I don't know, I haven't talked to Lynn and Paula and Janine. It's how they approach it. And I think the 35 hours does affect that they schedule themselves 35, but in reality, the position, these constitutional positions, it doesn't happen anymore, but in history, there have been constitutional officers and accountants that show up half the time. I mean, they're not.
Right.
Yeah, I mean, they're responsible for the job.
Right.
So I don't know the impact here is why I'm set at 35. Because I mean, it might have been that other positions in the offices were at 35 hours, but we moved a lot of those positions to 40 hours.
I think that's probably the answer.
The county has.
Yeah.
So I would, without talking to them, that's one of the things I think we should tackle is decide if we want to
Right.
just make it 40 and adjust the salary. I think if it's at 40, it'd be closer to 65.
Well, actually, if you take 60 divided by 35 times 40, it's 68,571. So that would make a significant difference. 12.5% raise right there.
And maybe was said, how long has this been like this? I mean, the market is what the market is. I don't know if they could be overpaying but I mean, it is what it is. How long has it been like that? No, just this discrepancy.
Well, we set it prior to their election, and their
Okay,
term is a 4-year term. So that's why we're looking at it now, because January, February, we have to set this for the next 4-year term.
They
gotcha.
have to have this done before they can take up papers.
Got it. Okay.
I don't know the history. I think this last round of 4 years, wasn't it only like a 1% increase each year? So that I'm sure contributed to falling behind.
I think if I look back, the equipment courts and sheriff, the county made an effort to adjust those up a little bit before.
Right.
Because those are on a different schedule. But,
All right, if you want to go down probably 2 slides, we don't need to look at the second half of that one. So this is the rural counties. And statewide, there are a lot of rural counties, but where they are varies a lot. So you see quite a variance with each of these. I have each county, the percentage of the average of each of the salaries. And there's quite a variance there, you know, it goes from 80-some% up to about 120%. So it varies a lot, and it depends on where you are in the state and also the size of the county. Most of these are very similar, but you can see one next to us, Barron, Monroe, and Polk County are all around 45,000 people. So that's significantly bigger than Sutter County, and their salaries reflect that as well.
Lots of times the ones that look at is Price County and Rusk County because they're very similar to what we are, size-wise.
Yep. And as we distill the data down, that's what I do, is take those ones that are really good comps for us.
So when you just look at them 2 other counties, yeah, we're way below that.
Yeah, and Bayfield is
Yeah,
quite a
Bayfield's close, yeah.
Bayfield's
So our
close.
size.
What was the one that was? I don't know.
And
You
then-
can go to the next slide. This one is by population then. This does include one metropolitan county, Kewaunee. Otherwise, these are all rural when you get to population density around our size, or straight population. And again, here though, you can see there's quite a variation. The further you get from our region, the salaries go up. It's no secret we're not in the richest part of the state. We all know
But yeah,
that.
that just goes with the area you live in too. I mean,
Correct,
Part
yeah.
of that.
The unfortunate thing that I realized, or didn't realize, but came across in researching this, is we have the worst affordability of any county in the state for housing, because our salaries are low, but the prices of housing is high. So that's something, it'd be great if we could work with some people to improve that. We need affordable housing. But anyhow, that's for another time. So then looking at regional, and this would be just kind of taking this section of Northwest Wisconsin right around us. We're getting a little better, but still in the low 90s. Douglas County is included in that, which is considered a metropolitan as well. And then Barron County, which I mentioned, they're quite a bit larger. Douglas and Polk as well, and their salaries reflect that. So then the next slide is, this is what I called the best comps then. And Lynn, if you want to scroll down just a little bit, I'll look at the map. The counties I picked here, and I mentioned the criteria, they're all the ones in blue though. So you can see they all are pretty close and almost touching, except for Violets, Buffalo, and Jackson are a little outside of our immediate region, but they meet the criteria, so I did include them in here. And coincidentally, if you look at it, those 3 are the ones that are, if you scroll up a little bit, those 3 do have the higher salaries. But Bayfield and Rusk are also good, and those are ones that touch us, so those are very good comps for us to look at.
So this is just an information piece for us to make the decision in January, is that correct? Yeah.
Now at this point, this is based on the 24.
Mhm.
Most 24 advertised wages,
Mhm.
which were actually set in 2020 for most companies.
Okay.
So, and just a couple other comments. So we set all 4 years before they take out waivers.
Mhm.
I think there's gonna be a fair amount of movement as counties start to set wages for the next 4 years, just because of the way the job market has been and competition for positions.
Mhm.
generally you set some type of, you project out the 4 years, you set an increase. The discussion, there have been some counties going in the direction of setting the first year's wage, and then adjusting it based on CPI or some other economic indicator. We talked to council about that last year. They don't believe that's legal,
Mhm.
but there are counties doing that. I think we're just gonna take into account what we think the market's gonna do and set an increase for positions every year. And the other discussion I've heard is a few cycles ago, a lot of counties made an effort to go across the board with having the same salary for district probate treasurer and clerk. I think we're gonna see some separation there with the county area because of the elections. That's.
Yeah. Well,
That's just sharing the discussions I'm hearing.
yep. No, I think they're good discussions. I just hope that we're looking at, I mean, I know you guys are, but looking at all avenues for all employees to make sure that, we're keeping consistent and making this a great county to work in for everybody.
So that's why I asked this to be on the agenda, so you can start thinking about how we want to move forward with our elected officials.
Outside of seeing if we can find how many hours per week counties are working, is there any, or officials are working, is there anything else you'd like to see for next month? That's statutory.
That's good thought. But I think we have to look at the hours. We have to change that. We have the rest of the employees in them offices are working 40 and we have these listed at 35. That's just.
I don't know, because I want to talk to them to see how they approach it, because we've got good people in those positions now, and I don't know the 35 hours pay scale makes a difference to them. They have a job to get done, and they do the hours that they do. But yeah, I think, and I don't know who's running and who's not running. Especially if new people looking to run, we should set the signal that it's a full-time job.
Right.
What makes me nervous is I think sometimes people run for those positions, maybe not qualified, but looking at the pay and looking at the fact that they get Fridays off. I just want to make sure that we're getting quality people, not just, hey, this looks like a great paycheck. Like, we can't, obviously that gets weeded out during the elections, but yeah, that's a hard one.
Anybody have anything else? Thank you, Mike. Nice job putting it together.
You're welcome.
So it'll be on the agenda either January or February because we have to get them set prior to them taking out papers. I believe you take out papers in April. So they want to know what that wage is before they take papers out. Number 13, future agenda items. If they have anything else that they haven't seen or that they want to bring in. 14, correspondence reports, conferences, meetings. I want to bring up something that I brought up at Public Works last night. I received 2 letters from the Hayward School District regarding, one letter was regarding the ATV trails, and the other letter was regarding a town road in the town of Sand Lake. And they're wishing for answers to their letters. At first I was just gonna write back to them, then I thought, no, let's bring it to a committee. So it's gonna be on the agenda for Public Works next month. How we wanna handle it, are we gonna answer it, how are we gonna answer it? Does anybody have any ideas or suggestions? When we do get other letters, there's probably other letters that float around periodically that come to the county board that should be answered. Sometimes they don't get answered because no one knows where to go with them. Just throwing that out there for you to think about. And if you want to do anything with that.
Are you sure those letters are legitimate? Are they from?
I really believe they're from students, might have been an assignment to do.
Oh, yes, because they had, Civics Club makes them write to elected officials. So
Okay.
if you respond to them like individually, you're fine doing that as well. If you're on that committee, they don't expect a lot more than a response.
Fine, I just didn't want to do without committees knowing about it.
You could just thank them for their interest in government.
Anything else? If not, meeting adjourned. Thank you for your time.
I get those all the time. And